This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Good news, team. We have an exciting new sponsor here at the Crypto Conversation, and well, they are perfectly positioned for today's changing investment environment. Because with market volatility so high and the expected returns for stocks and bonds so low, I tend to agree with the analysts at JP Morgan who have declared that alternative assets are no longer optional. And that is good news for those platforms who can provide access to the top alternative asset classes like Masterworks. Yes, Masterworks.io has solidified itself as the platform for investing in contemporary art. And Masterworks is on a mission to democratize art investing, which is a 1.7 trillion asset class. How do they do this? Well, Masterworks is the first platform to make it possible to purchase shares that represent an investment in multi-million-dollar artworks from iconic artists such as Banksy, Kaws, and Basquiat, all at a price point tailored to you. And since 2017, Masterworks has sold a number of iconic artworks, with each returning over 30% net IRR to investors. Legally, I have to follow that with past performance is no guarantee of future results. Now, if you want to get in early, just go to masterworks.art/cryptoconversations to skip their waitlist. That's masterworks.art/cryptoconversations. And you can see important Regulation A disclosures at masterworks.io/CD. And now it's on with the show. My guest today is Alan Vey. Alan is the co-founder and CEO of the Layer 2 blockchain project Aventus Network. Welcome to the show, Alan.
Thanks, Andy. Good to be here.
Good to have you here. Let's just begin with an introduction from your good self. Please, love to hear a little bit about your background as you lead up to getting involved in the blockchain space.
Yeah, for sure. So I'd say everything for me really started when I was at university. I did an undergrad in computer science at Imperial College and my master's in artificial intelligence. And that was so the master's happened in 2015. I was working at a hedge fund at Brevin Howard before that. And I went to my professor who had just started the cryptocurrency center at Imperial that year. And obviously Ethereum launched in 2015 as well. And I went to him and I said, I've got this background. I've been working on machine learning strategies in hedge funds. Obviously I'd known about crypto for a while, but now I wanted to get properly involved. And I said, I'm going to predict the price of Bitcoin. He was like, Alan, come on, man. Like, Bitcoin's old news. Ethereum's the new thing. Have a look into smart contracts. So it took me a while to properly wrap my head around it. But once I got it, I was like, damn, this really does look like the future of how we can build things, and the possibilities are endless. So that's really where the seed started. From that thesis, I did my thesis on film rights distribution. We worked with BBC and the BAFTA. And after that, I thought, hey, let's look at how we can actually apply this to industry properly. And that's where Aventus was born.
Fantastic. So, and what year was that? Because we were just talking before we started recording, Alan. And so, as I understand it, Fran, who is the founder, of course, of Brave New Coin and Tekami Group, he was involved, right?
Yep. So 2016, then what we did was, so I founded Aventus, then started as an event ticketing protocol. That was the first sort of sector we took a swing at.
Yes.
2016, a small seed round of investment from some guys, CoinShares, Danny, Russ, and Jean-Marie.
That's
and
right.
They knew Fran. They introduced us to Fran, and Fran gave us some great support in rolling out the ICO. Back then, he was the sort of relative expert out of all of us, to help us understand anything. And we moved to do our ICO in 2017 and sold our token for 60,000 Ether in a matter of minutes, and the rest kind of history.
Fantastic. Yes, it seems like such a long time ago, the ICO days now, right?
It's a different world, but I mean, it's good and bad. I mean, I'd say maybe 95% of the guys who did it back then are no longer around, either because of the sort of crypto winter or they were just sort of pump and dump schemes. but a few remain, and we're starting to see the real projects actually add value to this world. So it's been a great journey, and awesome to see how the industry is evolving. And obviously now I would say the last 2 years, NFTs have been the new kind of ICO wave.
Yeah, that is exactly right, Alan. And well, let's learn a little bit more about Aventus then, and then we can start to talk about Ethereum, NFTs, Ethereum 2.0, the implications of that. You talked about Aventus kind of starting off as this ticketing protocol, right? So talk a little bit more about that, and then how has Aventus evolved since then?
Yeah, for sure. So we started as a ticketing protocol. We were trying to take on the problems of touting or scalping. So essentially in ticketing, what you see is people will artificially price tickets underneath the sort of equilibrium market price in the primary market for a variety of reasons, right? The artist wants their core fans to be priced in various different reasons. And then what will happen is a bunch of bots will buy up all of that inventory automatically and then shift it through secondary markets at a sort of premium. And that premium, only the secondary market side benefits from. So there's a big thing in the industry where they try and lock down those tickets to ensure that everybody participates in that, or that that's not possible. So blockchain gave a great sort of ground to address that. Fast forward a few years, we built out the thing, we went to LA, set up a company called FanDragon out in LA to take up on this problem. Eventually did a deal with Live Nation, Deal Sound Talent Group, caboodle various smaller players in the market, delivering the solution. But when COVID came around, obviously it smacked that market significantly. So what we needed to do is understand, obviously from 2017 to whatever, 2019, 20, Ethereum massively changed. When we got our 60,000 ETH, it was $300, and then we kind of saw significant increases in that. So our portfolio, our kind of treasury had expanded, and we looked, what else can we do with this? So obviously in dealing with big companies or public companies, you need to build enterprise infrastructure. So we had already gone beyond Ethereum and built Aventus to kind of deal with the problems of scalability, unpredictable costs, high costs. So that's what Aventus had set out to do. We productized that into what's now become sort of the layer 2 space, made it sort of enterprise worthy. So you've got all the good bells and whistles that a big business would expect. And then we looked, where else can we apply this? So the immediate next sector we went into was loyalty. That's now active sort of across 8 territories globally. After that, we did supply chain. So we got a few gold deals actually in Dubai. But now more sort of soft commodities, trade finance, how it moves through the sort of supply chain. Immediately after that was video games, looking at in-game currencies, in-game economies, how you can kind of incentivize players. And then obviously most recently, a couple of different NFT plays to try and sort of flesh out that use case. So yeah, that's everything. And then obviously we have clients pursuing a variety of different sectors on Aventus beyond that.
And you're also, essentially though, Aventus is a layer 2 blockchain that lets users, I suppose, build on Ethereum, right? With some significant speed and capacity advantages.
That's correct. So at its core, we're layer 2 to Ethereum, meaning we kind of derive the security of our network from Ethereum. But then we offer benefits of scalability, so sort of up to 2,000 transactions per second. Our transactions confirm very quickly in sort of 0.1 seconds. And the average transaction fee is about 1 cent. So it's not just important to provide low prices, but also stable prices, right? When you sit at the table with the CEO and he's like, what's this going to with the CTO and he's like, what's this going to cost me this year? You can't say, 100 grand plus or minus 50%. It needs to be quite predictable. So all of that is what it kind of set out to solve. But more recently, the offering has evolved. As we've seen the blockchain space kind of roll out, you're starting to see these siloed pockets of value, right? We've got Ethereum, which was incredibly dominant, but that's decreasing slightly now. And you've got Solana, you've got Cardano, you've got a bunch of these top 10s kind of finding their areas of expertise. And the thesis that we really believe in is that things are rolling out like the internet did, right? We're starting to see these intranets And the key play is going to be connecting them all up so that you can get maximum eyeballs, you can move across any of the communities. So that's why we're aligning closer and closer with Polkadot becoming a parachain, and looking to extend the different bridges to blockchains that we offer to really give that sort of future vision of interoperability.
Yeah, that makes a lot of sense, Alan. And just looking through your website, I can see there's various other sectors that Aventus is focusing on. I think you did mention some of them. Obviously, NFTs are a big one. Entertainment or ticketing, which I guess is the origin story for you guys. But you've also got gaming, loyalty schemes, and supply chains. So, yeah, plenty going on.
Yeah. I mean, never a quiet day. Hey, we tried to find the low-hanging fruit, or at least areas that we had good connections in. But I'd say probably to date, we've kind of been, the Aventus Network's been in production since February 2021. So we ran our first year of staking. The majority of the fees that our validators earned in the network over that first year was from our loyalty transactions. But now we're obviously seeing gaming and NFTs get significantly more market share.
Yeah, that is very much the case. How I know you've been very interested in what is happening with Ethereum, with the move to Ethereum 2.0. So it's probably worth checking in, and I'd love to get some thoughts on that, Alan. I've kind of been meaning to probably do a few podcasts on Ethereum 2.0 because it is starting to come up. I haven't talked about it for a while. How are you starting to think about this?
Yeah, so personally, I think it's a great thing, right? It's very difficult when anybody's running a software project to, first of all, predict timelines or actually evolution of functionality. So I know Ethereum, especially for a project of that scale, has had their own difficulties there. But all of that aside, as they roll their features, they've always been quality, right? The Ethereum network's never really fallen over. So in terms of what is coming, it was interesting to see the initial launch, obviously, of the sort of beacon chain, the main kind of communicator between the different shards that will be existing, and starting to see that all more merged together. So the Ethereum 2.0, obviously what's being promised ultimately is up to something in the region of 10,000 transactions per second, which is really, really important in that ecosystem. Ethereum's been a victim of its own success, right? It's grown so big and so popular that the sort of 15 transactions per second limit that, I mean, massively surpassed Bitcoin back in the day when they kind of created it, but it's still an incredible limiting factor. So we've seen the layer 2 space kind of blossom, and now it'll be interesting to see the future of that ecosystem as Ethereum kind of scales to a degree, sort of horizontal scaling, allowing for many more applications to sort of use that transaction throughput. It'll be interesting to see how it evolves. What impact does this have on layer 2s? To what degree is that synergistic or competitive? So we feel that obviously when the base tech that you're deriving your security from massively improves its properties, you can obviously just create kind of a multiple of opportunity on top of that. But it's all going to really come down to how quickly can it roll out, and hopefully everything has been nailed and there are no problems. But looking at track record so far, I'm very confident.
Yeah, well, they're certainly, I suppose, taking their time. And I saw it was announced earlier this week, I think, the Ethereum developers have launched the mainnet. They call it a shadow fork, right? So, and that is, the purpose of that is just to begin, well, testing that everything is going to behave as it should before they roll this out on mainnet. Yeah, obviously it's taken a lot longer than people have expected, but you know, when you're fiddling around with a mainnet blockchain protocol, you want the developers to do things by the book, even if Ethereum does have a reputation for move fast and break things when compared to Bitcoin.
Yeah, I mean, we're talking about a project with what's 350 billion market cap plus. Yeah. So there's a lot of value there that needs to be protected, right? And following appropriate sort of developer practice is essential. So, I mean, the scope of the problem they're taking on, especially also moving from a proof of work that's sort of very inefficient kind of a way of achieving consensus to the proof of stake mechanism, and massively increasing their throughput. Like, there's so many of the fundamental properties of the network that will be affected by this change. It's only right for them to take their time and to roll out with a degree of discipline when you're talking about a 350 billion market cap. So I know it's been frustrating for everybody in the industry that it couldn't have come sooner, but, you know, great things take time, and I'm confident that it'll be really, really transformational for the sector, right? We're talking about the biggest blockchain that has functionality beyond just sort of a simple medium of exchange. So it'll really be interesting for me, I think, now to see how the relationship between Ethereum and Bitcoin evolves. Are we going to see a world where Ethereum becomes the dominant cryptocurrency now that it's not really held back by that? Because Bitcoin, obviously, for its purpose, is great as that sort of, many people refer to it as digital gold, or that transaction mechanism, that store of value. But now having this degree of utility that's not held back by any sort of fundamental restrictions, I think it'd be quite interesting to see in the next sort of year, 2 years, how Ethereum versus Bitcoin market cap evolves.
Yes, I very much think that is correct, Alan. And of course, I think the narrative has probably been with Ethereum in recent times, and of course, you know, that's been reflected in Ethereum's price performance versus Bitcoin. But, you know, we'll have to see. I mean, I guess Bitcoin does have that long-term store of value, move slow, stability on its side, and, you know, the long-awaited spot Bitcoin ETF would certainly do huge things for Bitcoin. But well, let's bring it back to Aventus then, Alan. You know, in a post-Ethereum 2.0 world, how does this change things for what you guys are doing?
Yeah, so given that we're kind of on the way, we're kind of moving towards being a parachain, right? So we're essentially, that interoperability point I spoke to means we will be switching from deriving our security from Ethereum to deriving our security from Polkadot, but whilst maintaining that bridge into the Ethereum ecosystem. So fundamentally what it'll do first, I believe, is obviously right now we decide the network to a degree is limited by how often we post to Ethereum, posting sort of proofs of the security of the network, right? So we do that only on a limited interval. I think it's every few minutes or so. But that time could be drastically brought down if it becomes cheaper. Obviously, it's just a question of what is the cost and how long does it take for that to confirm. So I think for Aventus or any layer 2, the base tech becoming much more performant means that you can kind of provide, to a degree, a multiple on that performance, because you don't have to deal with the problem of security. They take care of that problem and you can deal with scalability. So what I'd say for some examples is, whilst Ethereum with the kind of sharded architecture, to a degree what that means is it can deal with many more applications in parallel. So lots of people can build on it, but really high throughput applications are still not particularly well suited to the network, especially if they rely on state that sits between different shards. So there's still always a place for layer 2 solutions, right? There's still always going to be those really, really high throughput use cases where you need one dedicated thing that's just focusing on scalability in that respect. But it's synergistic. It means you can do that much more easily and provide a much better user experience because the base platform you're deriving your security from is much more performant. So I see it as a positive all round, but it will be interesting, right, to see the relationship this has to some of the leaders in the layer 2 space, like a Polygon or whatnot, if it actually supports or kind of changes the nature of that relationship, or the types of clients that decide I'm going to use Ethereum versus I'm going to use this layer 2 scaling solution. But ultimately, like I said, for Aventus, we really are focused on that interoperability piece and moving closer and closer into the Polkadot ecosystem.
Nice, very nice, Alan. And what about what are the risks here for Ethereum 2.0? I'm sure the Ethereum developers have got this as much in hand as they possibly can. I'm sure they've stress tested everything and they will mitigate against whatever risks they can see. But what do you see?
Yeah, so I think this comes down to the fundamental risks of sort of any new software as you release it, right? It doesn't matter how big your dev team is. When the whole world looks at something or uses something, you can only reason through what you think makes sense. And especially when you've been working on something and you're close to it, you don't even consider how crazy or the use case or how random people end up using your tech. So that's from an accidental perspective. And then never mind when you're worth 350 plus billion, right? You've got every hacker in the world with an eye on you looking for the tiniest mistake you make. And obviously all of this stuff is open source, which makes the task double as hard. So they've taken on a really big challenge here. And of course, they've gone through various phases, peer reviews, as many eyeballs as possible looking at it. But software is never done. And I would argue almost all software still has bugs in it. It's just a question to what degree the severity of those bugs are. Anything you've ever seen rolled out, even the best, biggest companies in the world that's been at it for years make mistakes. So that's why I think it's really smart to roll out slowly, right? Make sure that you put it in an environment that can't damage things, let it run there for a while, let people try and break it, get some learnings of, literally just brute force people going at it and kind of slowly evolve that. So I think the biggest risk factor is just some bugs left in there. The question is just how severe are those bugs? And that's where the auditing and the kind of reviewing comes in, that you kind of minimize the attack surface that may be possible there. And historically, they've done this very well, right? So I'm not saying I think it's a big risk, but if there is a risk, I think that's the area it's at.
Makes sense to me. Also, Alan, thank you for that. Just before we go to a break, and then we'll come back and we'll run you through the very famous Crypto Conversation hot take round. Just before we do that, tell people where they should go if they want to find out more about what you guys are building with the Aventus Network and the kind of use cases that you're supporting.
Yeah, for sure. So our website has great links to everything, right? So that's Aventus, Aventus.io. And then on Telegram is where the most up-to-date kind of usage is. So that's at Aventus Network on Telegram. And otherwise, if people want to dig in more depth, blog.aventus.io, we list out everything in depth. So yeah, please get involved and sign up.
Awesome. We'll be right back after the break.
Here's what's being said about Masterworks.
My name is Jacob N. I'm from Long Island, and I've invested over $73,000 with Masterworks. My portfolio performance just wasn't cutting it. I researched all these alternative investments, like crypto and NFTs, but they didn't make sense to me. Then I read about Masterworks in Forbes, and I signed up right away. And now you can too. Thanks, Masterworks.
Get VIP access at masterworks.io and use promo code JACOB. See important disclosures at masterworks.io/DC.
And we are back, and I'm with Alan Vey. Alan is the co-founder and CEO of Layer 2 blockchain project Aventus Network. We've been talking about Ethereum 2.0, the shift from proof of stake from proof of work to proof of stake, coming up very soon. Alan, you may or may not know, but I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
I did not know, but I'm always up for it. Let's go for it.
All right, let's go for it. So just hot take questions, quick snappy answers. That's how we do it here, Alan. I think we probably know the answer to this first question, but love to hear what you have to say. The question is, where do you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I would say it's about multi-chain. I spoke before, siloed value is not what we want. We want to connect this all up. Like the internet, we want the internet. We don't want various little intranets, right? All people have different good sort of bits to the base blockchain. Let's connect them all up.
Makes sense to me, Alan. What would you say is your firmest conviction, crypto opinion?
Well, that is going to drastically change the world, right? We've been saying this since, maybe 2016 when we properly got involved, but this is going to touch all aspects of digital life. We've already seen it massively transforming things. I think NFTs nicely brought this into the mainstream. This is going to drastically change and create incentives online we never could have imagined, and how we interact with tech moving forward. So whilst I know some people in the early days were like, this is going to be new government, new banks and stuff, I think it'll be synergistic to our existing infrastructure, but it's going to have a massive impact on how anything online happens, mostly in the background, but it's here to stay.
Yeah, I very much agree. And look, on a similar note, Alan, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, with that in mind, Web3, NFTs, blockchain, whatever you like, what does it look like in 10 years' time?
Oh, geez, this is to a degree looking into a crystal ball. 10 years is an age. I mean, 10 years ago, this stuff only just came to market, but let me say, any kind of digital interaction, whether we're on social media, whether we're transferring money, everything, I think, to a degree will start touching the blockchain. Mostly as operational efficiency on the back end. The end user is going to start not becoming, like, you don't care if you're using an SQL database or some kind of no structured database, right? Like, nobody really worries about that when they're on Google. But it's happening and it's giving you that benefit. And that's the same thing here, right? Blockchain is going to be everywhere in the background. And I think we haven't even started to think of the use cases yet. I mean, look how well fungible tokens evolved from when they started, all the different cryptos. Now we've got that with NFTs. What's the next thing in that space? So yeah, it's hard to predict what is going to come, the unknown unknowns, but we know it's going to be massive.
The unknown unknowns, indeed. And yeah, I mean, NFTs, just been fascinating to watch NFTs, explode in popularity, relatively speaking, still very small, but, kind of the first consumer tech, if you like, from the world of decentralized public networks.
Yeah, it's been fascinating. I'd say I like to look at the evolution that's kind of built up 3 pillars, right? We started with the commodity pillar, which was really just, with blockchain, we have scarcity, we have value. People were like, here's a picture. There was a big kind of hype around it, but not necessarily any fundamentals. Then the second pillar started to grow, which is community. People really understood it's about engaging a community, giving them repeated sort of value from these NFTs. And the final pillar, I think sort of mid last year, it's really started hitting home as utility. People understand I actually need to use this in some way. So sure, Metaverse makes sense. Zuckerberg gave everybody that one to kind of hang their hat on, which is great, but it's still a thing that's coming, and it's looking at where can we get that utility today and build up to that Metaverse vision that I think everybody is kind of in the midst of working on right now.
Yeah, did you see today, I don't know where the information came from, but Meta or Zuck, someone at Meta said that they're going to start to roll out these monetization tools to creators who are going to start to build on kind of the early versions of Meta's Metaverse products, if you like, and I think they're going to charge creators. It's like over 40%. It's a lot of cash. So that the more the game changes, the more it stays the same when it comes to Meta.
I mean, big tech has its issues, right? But I think by Facebook leading the charge, ultimately competition and efficient markets are what bring prices down and offer the best kind of products for the end user, right? So whilst they'll be the first mover with probably the biggest user base in history, other entrants will come. We've obviously seen YouTube recently announce their strategies around supporting their creators with NFTs. I think as there are more and more channels and more competition, the kind of inefficient pricing with the huge margins we're seeing in the NFT space will come down. But for now, yes, I mean, it's early days, but it's worth kind of making a mark in that industry. And I think overall it's good. Instagram's going to support NFTs now. Twitter supports NFTs. At least you've got a place to display them. And now they're going a step further by allowing payments and kind of supporting that infrastructure. And we need these big boys to really build out some of the key infrastructure and help guide the policy, right? Like a big company like Facebook can work nicely with the SEC or various other regulatory bodies that have the resources to help at least educate and make sure that some of the stuff shakes out in the right places. So I see it as positive, but like always, you've got to be a bit careful with big tech.
You certainly do. Be extra careful with big tech. Well, Alan, William Gibson, of course, famously said that the future is already here, it's just not evenly distributed. So, I mean, with that in mind, can you think of an example of the future being here right now, but most people just aren't really aware of it?
Yeah, I mean, I think we've had that to a degree with the crypto industry for a while now. I think the way our financial markets work, or many of our financial products, right, we still have a degree of inefficiency with middlemen, or should we say antiquated infrastructure that's a bit inefficient and leads to a higher cost base for people. So even just on a simple transacting basis, this is where obviously Bitcoin's first mover and pioneering kind of input has shown the market that there is another way. So I think if there's one area I would pick on, it's decentralized finance. I think that is the future of how things will work. I don't think it'll replace banks or any of that kind of more extremist views. I think it will improve and augment the offerings that banks currently have and allow them to provide them much more cost efficiently, essentially leapfrogging over upgrading their technology to the latest to really using this new technology. So in my mind, DeFi is one of those spaces, and many, if you look at the usage, it's tiny right now, right? But it's growing rapidly. I think that's one of the key bits where the future is here, but not widely available.
Yep, I think you're probably right there, Alan. Thank you for that. Time to zoom out, time to get a little bit weird just for a second. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
So I did my master's in artificial intelligence, right?
Yes.
So if I had to predict the long term for the human race, I don't know which way around we'll go about it. But ultimately, I think consciousness will move into the digital realm, at which point, all bets are off as to what happens to the sort of embodied state that we currently are. So yeah, where do we go? Is it the kind of altered carbon vision, if people have watched that? Or similar, I'm not sure, because there are various different ways it can play out. But I think once we have consciousness in digital form, the world's going to be playing by different rules. We've kind of transcended biological evolution. So yeah, that's my 2 cents.
Very much so. And look, you mentioned Altered Carbon there, a very good show. It's on Netflix. But the final question is, what is your favorite science fiction book, film, show, or universe?
Oh, favorites are always difficult to do. Let me say something that I have watched recently on the science fiction front. I mean, I already mentioned carbon fiction there, right? If we're talking AI, that is really one of my tops and favorites. Another one that I love is Westworld. For people who don't know, that's kind of looking at the moment we go from machines to how we develop that consciousness within machines and the kind of knock-on effects there. So I'm really, I'm in the AI space. That's the kind of stuff I geek out on. So Westworld, Altered Carbon, I'd say give those a good look.
Yeah, very nice. And on a very similar to those shows, really, is well, it's a movie, but I just watched it again 2 nights ago. Ex Machina.
Great movie. I know some of the Imperial guys in the AI department actually consulted on that movie. So yeah, big fan.
There you go. Awesome. Hey, this has been excellent, Alan. Thank you very much for talking to us today. Nothing else to say, really, except hand the metaphorical microphone back to your good self. Tell the people where they can find you on the internet, Twitter, or wherever else you like to hang out. And again, where they should go to dig into what you guys are building with Aventus Network.
Lovely, yes. So the best place is on the website, aventus.io, Aventus. And then I'll hang out in the Telegram. I try and answer many of the questions there. So that's at Aventus Network. So yeah, those are the key places. Otherwise, in terms of sort of personal social media, I only really keep LinkedIn, which again is just my name, Alan Vey. So yeah, hit us up on those channels. And it was great talking to you here today, Andy. Thanks for having me, man.
Thank you, Alan. All the best, and bye for now.
Bye.
All right, there you go. Thank you to Alan. That was Alan from Aventus. And yeah, Ethereum 2.0. What do you reckon is coming? I mean, it's been coming for a long time. They've been talking about this for literally years now, but it looks like it's going to roll out this year. So a lot of people very bullish on Ethereum because of that switch from proof of work to a proof of stake. So we'll just have to see, but I think we will talk more about this in future podcasts, perhaps do 1 or 2 special episodes. All right, that is today's episode though. Thank you very much for listening. This was the Crypto Conversation for Brave New